some analysis on today's news and trading. And let's just talk about the market to start with, Tim. Quite a disappointment given that we were expecting a stronger bounce today.
Absolutely, a very disappointing day on the market. We've seen the market just pare back after some gains in the morning, but it's just trading flat to slightly lower now. And we were expecting a stronger session today. US markets didn't make big gains, but we saw our market particularly heavily sold off yesterday. BHP and Rio down over 4%, and it was the materials and resources stocks today which we were expecting to see the biggest rebound in. But so far, BHP and Rio hardly managing to make gains today, only up around 0.2, 0.3%. The energy sector was holding up fairly well this morning. It's pulled back a little bit. The oil price still struggling back below $98 a barrel. And if we have a look at a one-year graph of the oil price, you can see over the last few trading sessions at the start of May, a significant drop-off in the oil price there. So that's putting some of our energy sector players under a little bit of pressure. We saw the trade deficit today. That came in bigger than expected, 1.58 billion, as growth in imports grew at a higher rate than the growth in exports, 5% versus 2%, and that triggered a bit of a drop-off in the Aussie dollar, which fell around a quarter of a US cent on announcement of those numbers. The big news today, obviously, the federal budget, which is being released this evening, and the market will be watching this in particular for what this is going to mean for the Reserve Bank and interest rates, and of course the Aussie dollar as well. Local data, economic data, has been very light for Australia and is light for the rest of the week, so we really will be at the mercy of global markets. Today, most of the markets around the region are higher, but interestingly, the Chinese market is lower, and so is the Australian market, while the Dow futures are pointing to a slightly lower open for US markets tonight.
Timothy, talk to me about Iluka, because we're seeing shares just take a bit of a plunge on news that it will indeed lower its production. Have we seen Iluka's share price reach its near-term highs over the past month, do you think?
I think we possibly have. We've seen the share price fall around 10% today, as it said it will lower production for zircon, as the market remains quite soft for this product, particularly in the US and China. They had actually previously flagged that the demand had been soft. We saw a soft production result in the March quarter for zircon. That dropped around 22% from the previous quarter in 2011. So it's not surprising to see them again downgrade their production targets to around 430,000 tonnes. Now, they are the largest zircon producer. They account for around a third of the world's supply of this. And this does generate significant cash and earnings growth for Iluka Resources. But considering that zircon does make up around 50% of Iluka's revenues, if the zircon market continues to be a little soft and we don't see much growth there, that could be a bit of a weight on earnings moving forward. The short-term demand for zircon is a little unsure at the moment. We have seen strong price rises in that commodity price, as well as them ramp up production quite strongly. But that's mostly behind Iluka now. So the zircon price is a little more stable now, and because of that, we could see only a little room for improvement in terms of Iluka's share price moving forward. And we could have in fact seen sort of some of the highs we could see for a little while in Iluka's share price last month.